Hi, thanks so much for joining in. You're watching NDTV Profit. My name is Alex Mathew and you're watching India Market Close. It's been a bit of a dull session so far and we're moving along the same lines as we saw in trade yesterday. And you have the benchmark Nifty 50 that is practically unchanged, just about 10 points lower at this juncture. And the broader market's not doing too much either. You see more declines there. But let's take a look at the heat map for the Nifty 50 because that will give you a perspective of how the patchwork for those 50 stocks are looking. And it's evident. There's the more declines than gainers on the screen. And this is also the case for the broader markets. Let's look at some of the key performers though. Let's focus on that at the start. You have the likes of Power Grid, Axis Bank. You have a couple of the private sector lenders that are actually leading the gainers, at least in terms of contribution. So HDFC Bank, once again, though it's not gaining too much, it's just about 0.5% higher, but it is the largest contributor to the Nifty 50 right now in terms of the gainers. You have ICICI Bank that is also gaining about 0.6%. Power Grid Corporation of India, by far and away the best performer, up about 3.7%. It has been in focus all of this week. Among the losers, you have a whole host of them, and the IT majors are looking a little bit worse for the wear right now. The worst performers are, in fact, LTI Mindtree as well as Tech Mahindra. You also have Wipro not too far behind, also losing about 1%. Some of the auto companies under pressure as well. Tata Motors down about 1.5% or thereabouts. JSW Steel, remember, the metal counters were doing incredibly well. They were sparkling in trade at the start of the week. Some pressure is evident right now. Let's look at the sectoral performers as well, because that's also going to give you some perspective on how the market breadth is looking. And it's quite an interesting map here. You have the Nifty Bank that had crossed the 54,000 mark. And in fact, that is likely the case right now as well. You don't see the numbers on your screen right now, but it's up about 0.2% or thereabouts. The media index is the outperformer today. But the losers are where the story is. You have the PSU banking index that's down about 1% or so. And you have the IT pack that's not doing too well either. It's down about 1%. And these are sectors that had done incredibly well earlier on in the week. So they're losing a little bit of ground. The last few talking points that I have right now, at least at the start, is a market breadth. Let's actually pull that up because you have quite a shift over the course of the session heading to where we are right now, and that gulf between the advances and the declines is actually widening at this stage, and you have practically 2 declines for every stock that is gaining in trade today. So, and that pain is likely more in the broader markets. And to talk about that in more detail and tell you which stocks are leading both declines as well as the gainers, Hersh is joining in. Hersh?
Yeah, absolutely. So we've got plenty of pain, especially in broader markets. Let's pull up something like a PB Fintech, something like a Zomato, down 2% Zomato, but PB Fintech down 5% in trade as we speak. You're also seeing some pressure on MCX. It was in the green for a better part of the day, but lost all of that. In fact, we're just off the day's lows as we speak on MCX. Gold financiers were likely in focus because gold prices are at all-time highs. You're seeing Manappuram at least in the red. Despite that, Muthoot is up 2%, but Manappuram down 1% plus in trade as we speak. So some real tough ones in terms of where the names in the broader markets are concerned. Let's pull up something within the Nifty small cap at least in terms of the top losers. Maybe an AstraZeneca if we can, down 4% after yesterday's rise. Gillette down nearly 3% as well. You have Godfrey Phillips having another dull day, second one this week in fact, 2.5% among some of the top losers on the Nifty small cap. On the Nifty mid cap as well, we spoke about Policy Bazaar, but Max Health is the other one, down 4% Devyani is down nearly 4% as well. Oracle Financial also down 3.5%+. BSE is having a bit of a tough day as well, 3.5% lower. So some of those really on our watch list, and of course we'll ask our guests as well views on some of those. But let's talk about some newsmakers. Delta Corp up 4.5%. Demerger being considered by the company and therefore likely some amount of value unlocking. Max Estates is up 4.5%. If we look at the intraday chart for Max Estates, if we can, there you go. It's gone from strength to strength pretty much through the day. signing a deal with New York Life with regard to a couple of real estate projects here. Car trade up 3.5%+. Warburg Pincus exits without any blood on the street. I mean, yesterday Warburg Pincus exited this one, and therefore we are seeing that kind of 3.5% move on car trade. So some of those big movers. Also, if we can pull up something like a Piramal Pharma, clearly stock of the day, 5% high on a 30,000 crore market cap, clearly doing well and continues to do better as we stand. Some big movers in terms of volumes, if we can. Car trade tech, of course, yesterday Warburg Pincus sold out, strong volumes yesterday, but today also volumes continue to be quite strong. You're seeing Ease My Trip down 14.5%. Blocks seen in the morning, 2.5% block, at least that's one which I saw in the morning, but the stock was down nearly 20 at the day's low, currently sitting 15% lower. Gravita India, though after day's highs, Motilal Oswal still constructive, saw 16% upside in terms of target price for Gravita India, 1.5% higher, holding up there for Gravita India. So couple of good moves.
I'm curious what you think about IEX, because we're seeing more declines. Let's pull that up while we speak about it. Market coupling back on the radar. This is a stock that declined quite sharply in trade yesterday, 4.3% down today as well. And concerns, Harsh, about the pricing ability for this company, which dominates the space that it is in, controlling what, 90% or thereabouts of the market right now?
Yes, and losing market share fast, just as quickly as it had or as it was at 90%. Now it's well in the 80s.
Oh, it's 84%. Yeah,
correct. So it's well in the 80s now. And if you look at the 5-day chart, if you can pull that up for IEX, the pain is real. It's 12% lower in the last 5 days. And it's fallen steeply, in fact, since the last couple of days. So pretty much all of those losses, 17% down in the last couple of days, IEX. So clearly, that one in focus as well.
Absolutely. You were pointing out, Harsh, a stock of the day according to you, Piramal Pharma, and it is indeed one of the top gainers in an otherwise weak session. It's up about 5% as we speak right now. And Varsha is joining in to talk about what Jefferies had to say about Piramal Pharma. Varsha, what are the key details here?
Well, Alex, here we are speaking about a 20% upside potential which Jefferies has given, has maintained a buy rating for the stock. Now, this is on the back of yesterday's Investors' Day held by Piramal Pharma, wherein Piramal aims to double its revenue and with EBITDA margin expectation of around 25%. Primarily driven by their CDMO contracts. Now, the CDMO division currently contributes around 58% to their revenue and is expected to benefit from the innovative CDMO products and APIs and sterile injectables. So, if you see, the innovator contracts currently contributes to around 50% of CDMO contracts. Now, CDMO revenue, according to Jefferies, is projected at around to hit $1.2 billion by FY30, with margins improving from 15% to 25%. Now, all this translates into 12.2% CAGR in terms of revenue and 20% CAGR in terms of EBITDA. Now, Piramal also expects to reduce its net debt to EBITDA ratio from 3.4x in FY24 to 1x in FY30, with a projected high teens when it comes to ROCE. Piramal also plans to double their revenue in terms of hospital generics business by FY30 with steady 25% of margins. Now, do note that the hospital generics contributes to around 30% to the revenue. So, overall, if you see a turnaround in the CDMO business and the hospital business, and also their consumer healthcare profitability, will position Piramal well for the future as per the Jefferies.
Lots of action in that space, Varsha. We were talking about AstraZeneca just yesterday, one of the big losers in trade today. Let's take a look at some of the key levels for the benchmarks, though. And we were talking about the Nifty Bank at the start, up about 0.2% and 54,000, quite a crucial level for the Nifty Bank, right? And it's holding on, and it's in fact closer to 54,100. Kush Bora, founder at kushbora.com, is joining us this afternoon. Kush, thanks as always for taking the time, and good afternoon to you. What do you make of the action right now on the Nifty 50 as well as the Nifty Bank. Not too much to write home about, but we're holding on.
Hey, hi Alex. First up, very good afternoon. You're right. I think, this is in line with what we discussed in the morning, which is there is a lot of consolidation going on in the Nifty on expected lines. I'll take this, at the moment after the kind of run we've already had. So I think on the Nifty, any kind of, a dip towards 25,800 should be taken as a buying opportunity. For now, I think consolidation is the name of the game. If you have a long position, hold it with a stop loss of 25,700. Bank Nifty in the morning as well, there was a straddle at 54,000. That seems to be playing out nicely for anyone who sold both the call and the put, might be pocketing the premium. So I think, this will remain the new base, new pivotal level for Bank Nifty. I think going forward, you're looking at a target of 54,400 and then a 54,800. The bias remains positive on Nifty and Bank Nifty both. However, the momentum is with Bank Nifty, and Nifty on a pullback of about 200, 150, 200 odd points should be considered as a buy.
Understood. Coach, just with regard to the Bank Nifty, you've indicated some resistance at 54,000. Just talk us through as to what's the next level to look out for where the Bank Nifty is concerned, because we've done very well on the Bank Nifty, especially in the last couple of weeks.
Indeed, Harsh. And, we've had 8 straight sessions of positive close.
Yes.
Yesterday was the first round of profit booking. After that, I think this consolidation, as I said, is a very healthy one. We do maintain 54,400 and 54,800 as the next targets, the support levels being close to 53,500 now. My only concern is that, a lot of private names have had a good run, so they might consolidate. PSUs were, I think, in the party only for a day or two, and there isn't too much support there. So I think if this consolidation does persist for, let's say, a couple of days or a week's time, that should be healthy. With the kind of run-up that we've seen in a lot of these private names, a bit of profit booking, a bit of sideways movement in these is expected. So Bank Nifty 2 could consolidate within this broad band of 53,500 to about 54,800 on the upper side.
Fair point. We're also joined this afternoon by Deven Choksi, who's Managing Director at DR Choksi Investment. Thank you so much, Deven, as always, for taking the time, and good afternoon to you. I'm curious. I haven't spoken to you in some time, and I'm pretty sure the last time we spoke, the Nifty 50 was very far from where it is right now. 26,000 was hit yesterday. It's not moved too far from that point, but I'm just curious. Did you think a year back that we'd be close to these levels?
Alex, good afternoon. I think none of us would be in the business of projecting what Nifty and Sensex would be on a day-to-day basis, or I think on a regular basis, particularly because, more importantly, as investors, we invest more into stocks. I think index is only a reflection of, whatever the stocks are doing, underlying stocks are doing. Like, for example, currently the rally is propelled by some of the heavyweights in the Nifty. And the reason for which this particular rally and the numbers, on the Nifty front is more because of the fact that the higher amount of basket allocations have started happening this month, particularly from the FPI investors. Those, I would not call them investors because they are basically, putting this money into the baskets largely to trade India market. So they are either the ETFs or the index funds of the world who are basically putting money for the trading purpose. In this given situation, the heavyweights like banking stocks, particularly including the HDFC Bank, they are the ones which have possibly pushed the numbers for the index as a whole. I would think that this is something not materially different than what we have thought about from the fundamental perspective. The company is remaining very, very strong fundamentally. Currently, the entire push has come largely because of the allocation of money from the FPI. Meanwhile, the domestic investors by the mutual fund, etc., they have been always putting in money into the investment market because of the higher inflow through SIP, etc. But this is the surge which has happened largely because of the global investors or the traders. That's where probably we are not in an accurate position to predict the Nifty levels. But if you ask me whether we are good to see the Nifty growing at 15 to 20% on a year-to-year growth basis, answer is yes. Largely because of the fact that the growth in the earnings is basically supporting this particular answer. So we remain comfortable on 15-20% kind of an upside on the index level, but more focus on the individual stocks for the earning purpose in the book.
Right, Devin, by Harsh also joining in. Just quick take. So you spoke about how some of the larger companies have started to participate. A couple of reasons also that you gave. Do you believe that trend is going to continue? There is still value in some of those in terms of individual names?
Yes, I think we believe that I think some of the stocks within the Nifty basket itself, I think they are underpriced currently. You look at some of the larger banks, I think they are not expensive. At the same time, I think they have not done much in the market as far as the stock price is concerned. Whereas they're working, the fundamentals remain pretty strong. And their promises to remain strong largely because of the fact that I think there is the size growing in the economy, the GDP. They are the ones who are basically having the balance sheet to lend money. They are not growing. They are still at the price at which I think they were. Similarly, I think some amount of concerns pertaining to the infrastructure companies, particularly I think in the metal space also, people haven't been focusing enough. And we felt that I think the metal space is shifting fundamentally. On one side, there is a structural element of, I think, bringing down the energy cost, which is happening through the use of renewables. On the other side, India as an expansion story, I think, is basically demanding more and more metal. These stocks have been available at a price and valuation, I think, which is attractive. Similarly, I think there are individual companies within the baskets, I think, of Nifty. You find that they are available at a valuation which is far more attractive. So in my viewpoint, because their strength is good, because I think the fundamentals of the business is remaining good, and because the valuations are not far too expensive, these companies, they register a claim for an upside going forward as well.
A very quick follow-up to that before we come to Kush on his picks. But Deven bhai, you pointed out value in the large cap space at the larger end of the spectrum. Would you then say that it's tougher to find that value in the broader end right now?
Yes, I think you are absolutely spot on. Because I think some of the mid-cap, small-cap companies, which are completely driven by the arithmetics of floating stocks in the market, they are far too expensive compared to other. Even if you assume that some of these companies are growing at a pace of around 30-40% rate of growth, they are quoting at a valuation which is 100 times, 150 times price earning ratio. And that makes me uncomfortable for a simple reason that I think if you cannot have the sustainability of this higher growth, you cannot be providing such a fancy valuation to those companies. And if you end up doing that, probably I think you are leaving with a lot of chance. There is no chance for these companies to make any error in this kind of situation. So we at the broader level in the market, save and accept few companies, I think we don't find enough amount of opportunities which are compelling opportunities. So that's where I think one will have to stay with quality, one will have to stay with consistency.
Fair point, and very well made. Kush, I'm coming to you on the picks that you have. Any buy today, sell tomorrow calls that you had, and how are they looking?
Sure, two buy calls, Alex. But before that, if I may just give a quick update on the opening trade that we had discussed right at the start, of the trading session today, and that was Senpo Gold. Now, one of the top performers for the day, it was about 1400 when we shared this call for targets of 1425 and 1440. If you see the high for this one is at close to 1480. If anyone's got this position, my suggestion would be to continue riding this momentum. Book partially at the current juncture, but hold the rest of the profit or rest of the position with a trailing stop loss at 1430 now. So the stock is on a tear, but it's now entered the overheated territory, so could see a round of profit booking going forward. Now, as far as the stocks, for today go, one of them is Lloyd's Metal. I heard Deven bhai talk about the metal space. This stock too, has been doing well. It's seeing a bit of a profit booking, from the higher levels of the day at the moment. But I think overall there is strength. We've seen volume action also pick up, and this stock has had a good run over the last, 8 to 10 sessions. This momentum could well continue for levels of 935, 980, 840 is where you place your stop loss. So the risk reward ratio is quite favorable. On the other hand, we've got Oberoi Realty. Now, this was one stock that we discussed yesterday for the first target of 1935 and the second target of 1970. The first target's been hit. The stock is close to the high point of the day towards the end of the session, which is actually a very encouraging sign. So traders could continue holding this position, or they could consider a fresh position now for targets of 1970 and 1995. And your stop loss here will now be up to 1900.
Okay, all right. Interesting picks there. I want to go back to the conversation that we were having about the opportunities available at the larger end of the spectrum. The point that Devin Bhai was making is very well made. In fact, Harsh was looking at some indicators that will point to a similar trend playing out at the benchmark level. In fact, some of the weightages will tell you that this is playing out quite nicely. And this is also what some would call, Harsh, a Buffett indicator. What is that pointing to?
Well, yes, Alex, it's the famous Warren Buffett behind which this name goes. And what he basically measures is total market capitalization of a particular country divided by the GDP of the country. And he believes that it's probably the single best measure of where valuations stand at any given moment. Now, given that we've just hit the 26K mark yesterday, I thought let me try and break this down a little further. So essentially, currently, the India Buffett indicator is at 140% as of August 2024, and this is a 20-year high, and therefore certainly not looking reasonable by any standard in terms of what the Buffett indicator is showing. Now, in terms of what the Buffett indicator has done and his views, what he suggests is if the percentage relationship falls to 70 or 80%, which currently for India is 140%, that's the time where buying stocks is likely to result or work very well for you. However, if the ratio approaches 200%, you are likely playing with fire. It's approached 200% in the US in 1999 as one case. But of course in India, it's been 140% is the 20-year high. So definitely something that Warren Buffett looks at in general from a market perspective, from an overall market perspective. Now, what we've tried to thereafter do is we've tried to break down that within where does value actually lie at this point. Now, if you're looking at mid caps, in terms of percentage to total market capitalization, a decade ago they were roughly 12.5%. That component of the mid-cap index to total market capitalization has gone up to 18.5%. So clearly the mid-caps, in terms of their contribution to total market capitalization, are contributing way more, nearly 50% more than they were doing last decade or maybe a decade ago. Well, very similar trend for small caps as well. They were just about 5.5% a decade ago, currently contributing nearly 10%. To be absolutely precise, 9.9% of the total market capitalization now contributed by small caps. And small caps within the small cap 250. Now let's talk about the Nifty 50 companies. Earlier, or rather a decade ago, very normal for them to contribute anything between 55 to 60%. They've never fallen below the 50% threshold. In fact, ever. This is now a new all-time low for them. 44% only contributed to total market capitalization. This is also likely due to the number of companies that have come on to and gotten listed, newly listed, and therefore increasing in terms of the universe of new companies that are coming through. But that's largely it. Now, just in terms of returns, this will really signify 15% returns on the Nifty 50, which is largely in line with the 30-year average. This is the last 10 years now. But look at where the mid-cap, small-cap and micro-cap is. These are the benchmarks, mid-cap, small-cap, micro-cap. This is what they've done in the last 10 years. Phenomenal returns made, but is it overvalued? That's a question which we're still finding answers to.
That's an interesting point. I'm curious about what Devin Bhai has to think about what we've just put on the screen. In fact, Devin, it more or less rhymes with what you've already been talking about in terms of the valuation picture right now. Incidentally, on the topic of Warren Buffett, there was a recent article that spoke about the amount of money that he has lost sitting on the sidelines because of the amount of cash that he is holding. It's not something that is unique in that a lot of our fund managers in the mutual fund space, Devin, are holding on to quite significant levels of cash. That seems to be a factor of the kind of liquidity that is coming through, what you mentioned, by domestic retail investors. Is that likely to continue? Is that something that you anticipate will continue? And what are the implications of fund managers holding that kind of cash?
So I'll try and attempt this particular point in 2, 3 points. First and foremost, I think the analysis that you presented, I think excellent. I think it validates a lot of points. First and foremost, on one side, I think without getting into much specific about this analysis, of course, I think the Nifty 50 basket remains compelling proposition because I think they have not performed enough in the marketplace. One of the reasons for which they have not performed enough in the marketplace is because of the foreign investors or traders have taken out sizable amount of money from the market in recent past. And I think they have just started bringing it in the last month, or in the current month rather. So that is one of the reasons for which I think their exposure is less in the top end of the market. And that's where I think your ratio has fallen from 55 to 44%. Come to the other point, I think, which is more interesting. I think a market capitalization premium, I think, over the GDP is 40% today. Generally, 1:1 ratio is a fair ratio. I think here in this case, it is 1.4:1 ratio. This particular premium probably can be attributed to a very significant change which has happened in global economy post-COVID. And that change is about the excess liquidity being generated into the systems by most of the developed nations of the world. In fact, pre-COVID and post-COVID, I think the amount of currency in circulation that if you see, I think that amount is mind-boggling. And that's something which is the root cause of propelling or high valuations that we are seeing this point of time in the global economics, global markets. In my viewpoint, I think this kind of excesses are distinctly doable, possible in a shorter span of time in the market journey. When you trade premium to the economy, I think it is not a sustainable kind of factor. It's probably, I think, an average factor over a period of time, it will get evened out. In this case, suppose if this premium valuation is continuing, quite possible that somewhere you will have the reasons for this premium valuation to come down, I think, to the GDP. But that part will depend largely on corporate earnings. As long as corporate earnings are growing at a rate faster than the GDP rate of growth, and as long as I think your contribution to the liquidity is happening faster than the GDP rate of growth in the economy, probably we are not likely to see the even out or rationalization of this premium. That is what my take would be. So we would be cautious. At the same time, we are extremely comfortable with some of the good underlying propositions as far as the growth is concerned in the business. We would love to see how exactly they compound over the next 5-10 years. That is how I think we look at our approach in the investments.
Okay, Devin bhai, we're going to circle back on this one, but I'm going to quickly switch focus. There are plenty of stocks buzzing, one of them being Ease My Trip. In fact, Easy Trip Planners. Mahima's here with all of the details. 15.5% lower, Mahima, on the stock.
Absolutely. So 15.5% right now, but it did hit a lower circuit of 20% today. Now, this is because there has been multiple large trades and roughly 69 crores of shares were traded. Now, history suggests that promoters have been selling stake in Ease My Trip. If we compare the shareholding pattern of March 23 versus June 24, right now, promoters in March 23 were holding roughly 75%, and right now their share is roughly 64%. And in terms of two promoters, that is Nishant and Rikant, both have diluted the share, especially Nishant has diluted its share from 32% to 28%, and Rikant has diluted his share from 32% to 26%. So combined, both of them have diluted their promoter stake by around 10%. Now in terms of stock performance also, the stock is not done very well. 1 month it's been down around 15%, 6 months down 22%, and 1 year it's been down 18%. And moreover, despite of all of this, the management is foraying into new businesses. Recently, they invested almost 90 crore in Rollins International plus Pleffedge Home, which is them foraying into medical tourism. And they've also introduced Scan My Trip, which is integrated on ONDC network. And they've also approved incorporation of ARM for manufacturing electric buses. Now, what the management has said, that they'll be manufacturing these electric buses, they'll be using them for their own consumption as well as selling those EV buses. And the rough outflow right now for R&D is 200 crores, and they're building a capacity which will have a capacity of roughly 4,000 to 5,000 buses. In terms of fundraise, management has the board has approved 1,000 crore of fundraise, which they'll be using for various organic and inorganic expansion. In terms of other strategic initiatives, they have collaborated with Adani Digital Labs to offer seamless duty-free shopping at airports. They've also entered into strategic partnership with Google Wallet. Moreover, in terms of guidance, the management has said that they're targeting a shift in revenue mix from 88% in air and 12% in non-air to 75% in air and 25% non-air. Moreover, in terms of financial performance, if we see revenue CAGR for 2 years has been 44% growth. However, net profit has grown only 5% in those 2 years in terms of CAGR, and margins have shrunk from 57. This is gross margins of operating margins, which have shrunk from 57% to 46%. Lastly, in terms of valuation, the stock is currently trading at 59 times, and Bloomberg estimates suggest that 25 estimates will trade at roughly 31 times, and 26 estimates will trade at roughly 26 times.
It's an important point. I was just looking at the 1 year chart, Mahima. It's down about 18% or thereabouts. Most of the damage done in trade today, prior to that, was more or less unchanged or flat. And it's not too much to speak of in a space where practically everything is rising. I want to get your view, Kush, on the charts and how it looks. Of course, today volumes are going to be elevated, but what are the key levels that you would watch out for?
Well, so Alex, I think it was this morning that, we had a discussion around this, and I said that, it doesn't really, instill too much confidence, even if there were a few price bumps over the last couple of sessions, then, it doesn't really augur a lot of confidence. 43 was the 200-day moving average resistance that the stock has not been able to cross for a while now. It's given way from there. Now, on the downside, you're looking at, a strong support zone around the 3100 mark. But I would suggest that, given the kind of move that the stock has seen over the last year, as you rightly pointed out, and the kind of fall that it has seen, don't really consider this as a very attractive buy just yet. Just from a level perspective, 31 is a crucial level and a long-term support. If that's broken, then the stock could head further down.
Okay, thanks for that, Kush. Mahima, Mahima is still with us, and while she is, let me go across to her because some perspective on this Delta Corp demerger. Mahima, stock is up, obviously. Investors seem to be excited about this, but what's your sense? What have you been looking at in terms of this demerger?
Right. So, in terms of the demerger, what Delta Corp is now doing is it's demerging its hospitality and realty business. And as far as shareholders are concerned, well, each shareholder of Delta Corp will get one share of Delta Penland, which is their hospitality and realty business. Now, in terms of how the hospitality and realty business is shaping up for Delta Corp, the revenues as of 31st March 24 stood at roughly 51 crores, which is 5.5% of total Delta Corp's revenue. And March 24 also had an EBIT loss of 6 crore for this particular business. So margins were negative at 12%, whereas gaming business has a margin of roughly 32% overall. So if we see in terms of rationale for the demerger, of course, management has said that this will unlock value for shareholders. Plus, it will also help management manage the two businesses separately. But it makes sense to always bifurcate your profitable and non-profitable business, as well as since Delta Corp is in casino business, it has a lot of regulatory overhang as well. So the rationale for the demerger could also be that the regulatory overhang on casino business could be separate and hospitality and realty business could be separate. Now, in terms of development in both of these businesses, well, in hospitality business, they're constructing a 450-room hotel in Goa, which has an outlay of 450 crores, and in real estate business, they've entered into a partnership with Alpha Alternative Fund Advisors, where their outflow is roughly 90 crores, and their stake in that particular partnership is 11.6%. In terms of how the Delta Corp has performed in Q1, where revenue was down 30%, EBITDA was down 68%, net profit was also down 68%, and margins significantly shrunk from 37% to 17%. Now, this was on the back of one-off of its Delta Offshore Developers, which is a foreign subsidiary, which was striked off, and the loss was recorded in the books of accounts. However, overall, also gaming revenues were down 25%, and board recommended a final dividend of 1.25 per share. Now, in terms of valuations, the stock is currently trading at a PE of 14, and in terms of the stock performance, the stock has not done very well in this year itself. 1 month it's been up just 5%, 6 months it's been up 15%. However, YTD it's been down around 11%, and 1 year it's been down around 6%. So this is the overall view of what's happening in Delta Corp, as well as why it's buzzing in trade today.
Thanks, Mahima. It's been a busy day for you. I'm going to make it slightly more busy for Deven Choksi. as I joined the show as well. Devin, great having you and good talking to you, both Kush and Devin. Now, this Ease My Trip solve this issue for us, Devin, because I can understand if an entity has more than 75% stake that you make large stake sales in order to comply with norms. Even then people don't do this, right? Because 10% or 8.5% is a very large quantity. And it's not just the first time this has happened. Presuming that today's stake was also sold by the promoter, which we learned from sources. This is there was once done in FY24, now being done as well. What's happening here?
Not enough that I know about it, Neeraj, at this point of time on this company. Because what financially I think I have been observing the business model for this company. They have been into a squeeze as far as I think the numbers are concerned at the bottom line. And that's what something which has kept me a little off from the point of view of looking at this company. So the top line part of the growth is not ruled out. I think how exactly this company's business model is working for generating better profits on a year-on-year basis is something which I am not finding an answer to. Certainly, I think this other part which you mentioned just now, I am not fully know about it, so would refrain from putting any comment at this point of time.
Fair call. Okay, it could be interesting. You know, the reason why, guys, I mean, my thought, I don't know how the two of you think about it, but the reason I find this intriguing is because here's a company which has made fairly large, I won't say promises, but statements around the new venture as well, right? If you're so constructive on the future, why is it that you would take off such large sums, presuming, of course, that today's stake sale is done by the promoter entity? And if that is the case, and I think the stock price movement smacks of that, why would you take off such a large chunk off the table? So that is the issue here.
I mean, so I was curious about the stock performance, which is why I was pulling up the one-year chart as well. It's a different case if you have a stock in our market, which has gone from height to height. But this is a stock that was flat over the last 12 months, and you're still seeing a significant stake that was sold. There are promoters that have taken money off the table. But in instances where you've seen a significant up move in the stock and they're booking some profits, which is okay.
But 10%, Alex,
is significant.
Is a significant.
It's a question mark, certainly.
It is a question mark. I think that's the question that the street seems to be asking today.
Yeah, I mean, from 75, if you're bringing your stake down to 55.
In less than 2 years.
In less than 2 financial years, 16 months roughly is what they've taken to bring this down. In a staggered fashion, of course. But even in terms of stock price performance, Alex, the stock's 52-week high was 54 rupees a share. So we've probably seen a bit of a rally on the stock, and thereafter, of course, given the quantum of supply of the stock, given that a 10% block has been sold, likely that has led to some bit of pressure, and now just gonna add to it if it's the promoter who has sold out. Of course, need to
verify,
wait and confirm that. But yeah, Neeraj, I mean, e-buses, they've come on our channel, they've spoken about e-buses, they've come and spoken about how they plan to use e-buses for the purpose of intercity travel. They want to optimize, make it more efficient, and then thereafter you've sold a large chunk.
Wasn't there a conversation about hotels as well, or am I completely mistaken?
There are too many conversations, but but it's been interesting for Ease My Trip for sure. So this is one stock that we needed to talk for sure. Okay, do we need to take a break? Maybe, okay, we need to slip into a very quick break. But up next, we try and talk about SpiceJet as well, if not already, because it is now very close to the QIP price for a stock which was at 78 5 days ago. It's smacked down now to the pricing at which large institutional investors got in. Try and talk about that on the other side. Stay tuned.
All right, you blink and you miss it. The equity markets at fresh all-time highs. We were treading water just about half an hour back on the benchmark index, but right now you have gains of about 0.3%, and that sharp move just as we were having our sips of coffee and tea, and just about a few minutes left, 15 minutes left for the close. What are the gainers and what's contributing to the gains right now? You have HDFC Bank, which was up about 0.5%, up now about 0.6% or thereabouts. Not too much of a move, but in the context of very narrow ranges today and very small moves, it is quite significant nonetheless. So Axis Bank as well as HDFC Bank contributing. You also have ICICI Bank not too far behind. You don't see it in the top 5 contributors, but Power Grid Corporation, top gainer in terms of the market move. It is up over 3%. ICICI Bank also up about 0.4% or thereabouts. Now close to 4% in fact on Power Grid Corporation of India. From strength to strength, Neeraj.
Most certainly, and this is great stuff, right? Because you are looking at the market, which to a lot of eyes is looking terribly expensive, and we are charting out courses one after one. I think Gautam Shah made this very interesting point the other day that most people are worrying about the highs. Don't stop doing that. Start enjoying the highs because the markets are doing what they are doing in a bull market. Now, the question to Kush Bora is, because Kush Bora also admittedly has been a bit skeptical, that Kush, and thankfully he's not gone short, but Kush, my question to you is, you've not gone short, but would you create a fresh long here? And then I would love to know from Deven Choksi whether he is going out and investing fresh money at the current juncture or not. But Kush, to you first, a trading call.
So, Neeraj, out of the 3 options, buy, sell, or hold or wait, I think the only 2 options are buy and hold. Correct? Buy or hold. Holding is not making, or waiting is not making you any money. Correct? Yes, I was a little skeptical. We had that minor dip, but then, markets tend to surprise us and on the positive side. So if you do want to make a trade, then, by all means, it has to be on the long side. Now, you could move the stop loss higher from 25,700 to about 25,800. And the next levels which you're looking at are 26,200 and 26,400. I am still a little more constructive on the bank Nifty, although as we were just discussing at the beginning of the show that a lot of private banking names have run up quite a bit and might consolidate. But I think after this brief round of consolidation, the up move on the bank Nifty should continue for targets of 54,800. So both the indices on the long side, I would still prefer to buy on dip, if the market is gracious enough to give us that.
Kush, sorry, before I come back to the event buy, Kush, if I can just try and complete this point. With regard to the upside now, were you expecting Nifty to clock another record high today, especially after the kind of day we've had?
So, Harsh, yesterday, Tamanna, made me and Aditya put a wager whether we'll hit 26,000. We won that. We didn't even get a coffee for it yet. But you can't get lucky every day, can you? So sure. No, I wasn't expecting the markets to hit a new high today.
Got it.
A bit of a pullback would have been nice.
Right. Devin Bhai, if I can come to you, Neeraj of course put the question: Are you looking at investing at this point, given that we are at highs? And if I can just add to it, therefore, you spoke about earnings compounding. Do you expect that earnings compounding to happen to try and catch up with the kind of rally we've seen in markets?
Oh, yes, absolutely. I think no doubt about it. I think some of the quality businesses are definitely making a point to have a sustainable earning growth continued for next 5 to 10 years. And that's what is most important about it. Likes of housing finance. I think Bajaj Housing Finance has recently got listed. I think you see how they are compounding their revenue model, and the growth that they are producing is phenomenal. I think the business model itself, is giving you a good amount of confidence. Similarly, I think some of the engineering R&D companies who are basically using the technology as a backbone, they are using, this opportunity phenomenally because they are in the changing world of AI. And similarly, the customer segment, be it automobile, be it aviation, be it healthcare, I think each of these customer segments are transforming. And these companies are actually, playing significant role in getting that part of the business into their fold. So yes, some of the companies do demonstrate a significantly large amount of opportunity on which they are working. they do demonstrate, I think, the sustainability of the growth in the business. And at the same time, I think they are becoming relevant, more and more relevant with the changing environment, with the use of technology. So in my viewpoint, I think the opportunities are available in every market. In this market too, some select opportunities are definitely available. The only question is that whether every opportunity materializes in a short-term gain for you. I think some of the opportunities will play out over a period of time, and that patience you must have. That's what I think we try to do in our portfolios, making clear to our clients as well.
Well, we hope that you find opportunities soon. Hopefully that doesn't mean that the market has to correct very, very stiffly, Devin Bhai. But thanks so much for joining in today and giving us your thoughts. Really appreciate your time. It's almost 3:20, so I'm going to make an exception. Just first go to Kush Bora for his top closing strategy. This is the BTST call, viewers, that we bring to you. So every day at 3:20, we'll try and get our guests, whether Kush Bora or Kush Bora plus somebody, to try and give us the top BTST trade or STBT trade. Kush, I presume in today's session it would be a BTST?
Spot on once again. And this one's going to be from the chemical space. This is Himadri specialty we're talking about. Just to give your viewers a context, 1st of August, when we discussed this stock for the first time, at a price of 450, and we've been discussing about this, being constructive on this one, ever since. Less than 2 months over, and about 40% return, slightly higher than that. The stock continues to do well. We've seen 4-5 sessions of consolidation, but today, on the back of good volumes, the stock is up again. My suggestion: you should consider this one for a medium-term perspective for targets of 750 plus. But as a BTSC or a near-term trade, not a bad idea to play this one for the targets of 685 and 715, and your stop loss is at 630. This consolidation might now act as a launch pad for another 10 to about 20% of move from these levels.
Okay. All right. So that's the call for you from Kush based on the technicals as they stand right now. Let's focus in on a few stocks that have been buzzing, and the pair Z Entertainment, Z Media have been in focus today, and Rucha is joining in to give you some perspective on why they may be buzzing. Rucha?
You rightly mentioned Z Media and Z Entertainment are in focus today. Well, talking about Z Media, well, it hit an intraday high of around 13%. Well, the recent news is that the company has announced a proposal to consider fundraising at a board meeting to be held on September 27th. Well, talking about Z Entertainment, the company has volume of about 1.53, its 30-day average and intraday high of around 7% in today's trade. Well, the news in Z Entertainment is that it signed a pact with Mukta Arts for 37 films, and also recent news with that company this week is that the appeals filed against the company was dismissed as withdrawn by order dated around September 20th. These appeals were filed by Axis Finance Limited, IDBI Bank Limited, and IDBI Trustship Services Limited. Now, Z Media is actually not a subsidiary of Z Entertainment, but talking about the promoters, they largely had the same promoters. Like Z Entertainment promoters had also invested in Z Media. And talking about the analyst recommendation, well, nobody on the street covers Z Media according to Bloomberg analysis. But then let's move our focus to the share price performance. We'll talk about Z Media Corporation. It has given around negative 4% returns on a year-to-date basis and around 44% returns in about 6 months. And well, if we talk about Z Entertainment Limited, well, there's largely been a sort of mixed opinion over here. But looking at the stock price performance on a year-to-date basis, the stock is down about 60%, and I'm talking about Z Entertainment. And talking about a 6 months basis, the stock is down about 5%. Although Z Media has done really well on a 6 months basis, this is not the case with Z Entertainment Enterprises Limited. So this is what we have with respect to the two Z major companies.
All right. Thanks so much, Rucha, for getting us those details. Now, let's also talk about IEX. We did briefly talk about it earlier on in the show, and the reason why it is reacting so sharply over the course of yesterday and today is the potential implementation of market coupling. We were going to get Mihika on to talk about the factors that are at play right now. Do we have Mihika? Okay, so let's try and get Mihika at some point to talk about that. But it's interesting, and Neeraj, I'm curious to see whether or not any changes are made to portfolios that have held this stock for quite a while, despite the crack that we've seen over the course of yesterday and today. In the year-to-date 2024, it's still 20% higher.
Yeah, you mean to say only 20% higher relative to what BSE has done. Yeah, but it's had a good run, and then just since yesterday it's kind of come off. But it's a trader-friendly stock. Very quickly, before we actually hear a really bullish view at Nifty at new highs, you need to hear bull views, by the way. But Kush Bora, very quickly on IEX, if we haven't spoken to you already, is there a trade here?
No, we haven't, and no, there isn't. The stock is falling. You might want to wait. This is the second day of the fall on the back of good volumes. Wait for this one to, stem this fall, and from there on, you'll get a trade. 195, 193 are the next support zones to look at. If those are held, you might just get, a rebound trade on this one. Not just yet.
Okay, well, since I said here bullish views, right? The market's at new highs. Foreign institutions, buyers to the tune of 93,000 crores worth of equities so far, $11 odd billion. But this is despite markets touching new highs and valuations inflating every day. So the point is, have FIs liked India enough, or is there a chance that flow will go up from here? Rajiv Batra of JP Morgan thinks so. Listen into what he had to say.
Interestingly, I remember last time when I was there on your show, we highlighted that JP Morgan expect $100 billion inflow in Indian equity market. Money has started coming in. Last 7 months, India has witnessed $11 billion inflow. And these people, foreign investors who disagree with that thesis, are now not questioning valuations and investing in Indian equity market.
Would you reckon that this gap between 100 billion of expected inflows, which turns India into an equal weight from an underweight, versus 10 billion or 11 billion that has come thus far, you reckon this gap of $90 billion, which is a lot of money, could get filled over the course of the next 12 to 18 months?
I'll say 12 months will be a stretch, but definitely 18 to 24 months is well enough. But I will say it's contingent upon capital issuances, that is the fresh money, primary issuances coming, or additional offers. So we have seen over the 12 months, $50 billion issuance have happened, primary and the secondary side. Foreign investors have largely come into them. Because they don't have to chase liquidity at a higher valuation. So that's an easy way to get out over there. That's the point number one. Point number two, it's most probably gives them a bit kind of a favorable opportunity to enter into that space. As an example, if you are competing out in the secondary market with the domestic, with HNI, with PMS, with AIF, it becomes too crowded in this one. Here you get simply a position out. So that is the key reason why, like if you keep on having new primary issuances and secondary issuances coming up, that will give easy way route out for foreign investor to come. And remember, it's not just the active guy, the pressure is also there on the passive guy too, because India is slowly and steadily inching towards the mark of either meeting China or beating China in terms of an index weighted. In MSCI IMI index, which tracks $125 billion passive allocation, India has already surpassed China. But the bigger index, which have a $500 billion passive allocation or chasing, that's where we are still 1.5% lower than China. But as the weight keeps on increasing, you will not only get money from the active investor, you will also get the money from the passive investor also. I have given you the sizes, just multiply the weightage and apply how much money it will be.
How much money it will be. And by the way, in case you want to watch some of those conversations in more detail, I would encourage you to go to the YouTube channel and check them out. I certainly have spent a little time to listen to what they had to say, the folks at JP Morgan, and Neeraj has done some very interesting interviews. But Hersh, later on, if you were to say that there is a little bit of fatigue creeping in on the Nifty 50, on the Lal Street, that is not evident in the last run that we've seen on the benchmark at least.
Absolutely not, especially the last half hour, Alex. It surprised most of us, including a Kush, but anyway, yes.
A late sprint is what you've seen on the benchmark Nifty 50, and you're seeing, of course, action in the larger end of the spectrum. Broader end still looks a tad bit weak, but let's pull up the picture for the Nifty 15. You'll see what has happened, because we were looking at the IT pack, and some of those stocks have come off the day's low. Of course, right on the bottom of the screen, you still see the worst performers in the form of LTI, Mindtree and Tech Mahindra. Right on top, you actually see a more greener picture. Earlier on in the session, just about 11 stocks or thereabouts gaining, and much more now, more than half of the Nifty 50 in the green right now.
So the breadth on the benchmark, Alex, looks extremely healthy versus where we started at least this show. But the broader end, that's where likely most of the action is. Let's pull up the advanced decline. It's around 0.4% lower on the small cap. And before we go to charts on both of these intraday charts, if we can pull those up, let's have a look at the advanced decline if we can. And there you go. So the breadth of the market slightly improved, but nothing significant of any sorts. And now let's look at the intraday graph of both the Nifty small cap as well as the mid cap. There you go. We're definitely off the lows where we were maybe an hour or so back, but no significant recovery which we saw on the Nifty and the Sensex, which both the benchmarks.
I'm curious about the IT index. Let's pull that up.
Let's pull that one up as well. Yes, you're right. There you go. So that spike that we've seen in Nifty IT is what is likely aided the index as well. So fascinating, that one. But we've closed for the day, just to kind of mark that out. And there you go. We've closed the Nifty IT around 0.6 odd percent, and the Nifty 50, you look at that spike. We've closed at record close for the Nifty today. 26,013. We've breached yesterday's high as well. There you go. That's a sum of all the sectors which were buzzing today or which were pretty much flat. But that's how it played out. The Nifty FMCG, IT, and the PSU banking index were three of the top losers in terms of sectoral indices. And there you go. Those are all the stocks, especially within the BSE 500 universe, which have buzzed. We've spoken about some of them. AstraZeneca in detail and depth yesterday. IEX today. PB Fintech was down 6% odd. Strong volumes on PB Fintech as well seen today. So some of those have really buzzed. Easy Trip, we spoke pretty much comprehensively. But Z Entertainment, positive on the back of fundraise in Z Media. And you're also seeing 5-star up 5%. Again, on the back of strong volumes. Very interesting story.
I'm going to be curious about what plays out tomorrow, because tomorrow, of course, is the monthly options expiry.
Yes.
And so, therefore, in the context of that, a late run today bodes well for what happens tomorrow. Holding above 26,000 is going to be something that we will watch out for.
Absolutely. One more reason to tune into NDTV Profit. But with that, let me thank all of you for tuning in. From Alex, myself, everyone who puts the show together, thanks so much for watching. Stay tuned. More action on the other side, but do join us tomorrow. It's going to be an interesting day. Hello and welcome. Thanks for tuning in. I'm Hersh Sayta. This is a very special conversation, very special chat on Morgan Stanley's views with regard to banks as well as the larger banking environment. I have with me the Morgan Stanley India banking analyst Sumit Kariwala to talk to us about all of those trends, break them down, as well as talk about possible opportunities as well, if we can. Welcome, Sumit. Let me first start off by just asking you how you believe the environment is shaping up. We spoke a couple of months back. Talk us through what you believe has changed maybe in the last couple of months in terms of views.
Thanks, Hersh, for having me on the show. I think the banking sector outlook from a 1 to 2 year perspective is quite positive. Near term, obviously, we are seeing some headwinds. If I look at deposit growth, that remains muted. Banks are still raising deposit rates, so there'll be some pressure on margins. Note on the lending side, the loan mix shift towards unsecured has slowed a bit, which means that the loan yields are not going to improve significantly. Also, there are asset quality challenges in certain pockets like credit cards and MFI. I don't think so this is a big system issue, but there are some players and some segments where you're going to see some challenges. Over and above this, we should not forget some of the regulatory challenges that are going to come about. The RBI has put out the draft guidelines on tightening liquidity, and we should see the final guidelines come out sometime over the next 3-4 months. Also, the RBI had alluded that they'll put out the final guidelines on expected credit loss provisioning methodology, which will again put some capital pressure on the sector. So we're going to watch some of these things. We have recently cut earnings for the banking sector. So yes, near term some challenges, but from a 1 to 2 year perspective, I think so this sector should do quite well.
Okay. Now I'll stick to the entire banking segment rather than talk about some specific pockets, and I'll come to the earnings card because that's very interesting. But just with regard to lenders in general, they've underperformed the Nifty, right? Why, of course, is that so is a known fact with the kind of deposit growth pressure, etc. But do you expect an outperformance going forward? Is that something that one can expect?
Yeah. So if you look at the sector and if you go stock by stock, what you will see is that there are 4 or 5 banking stocks which have underperformed. The rest of the sector has done very well. You look at the entire state-owned bank pack, you look at some of the mid-sized banks, some of the large private banks. In fact, banks that went through an asset quality cycle during the past decade, they've actually done very well. Some of the